next up, we've got session on iGaming and private capital. I know we also had a question about the legal landscape. We'll have a regulation fairness session coming up at 9:30 Pacific time. So that's coming up as well. Right now we have Alex Moazed, who's the founder and CEO of Applico and also my co-author on our book, Modern Monopolies, and Melissa Blau joining us as well. And I'll let you two kick it off.
It's great to introduce Melissa Blau, director at iGaming Capital. She has a plethora of experience in iGaming and sports betting as an advisor to many land-based casinos and digital players, and understands how to help them as well as the capital side of things today. So great to be here with you all. And Melissa, thank you very much for joining us.
Thank you for having me.
You know, you see a lot of different things from your perch. And I think Les and Nick were just talking a little bit about, you know, some examples of areas that they've seen with success. When you look at this convergence of land-based casinos and how they are looking to navigate this world of iGaming and sports betting, what's the 30,000 foot view of the good, the bad, and the ugly?
Okay, well, it's an open question and I hope I can answer it succinctly. I do work with a number of casinos and sportsbooks in the United States, advising them on basically what to do with their iGaming businesses, right? So for the vast majority, they've been all or will be given the ability to do sports betting and or iGaming, right? And you know, I think it's very important that for each scenario and for each state, how it legalizes is very different. You know, is there the presence of iGaming? Is there the potential of the presence of iGaming? How many other, how crowded is the market or not crowded? What does the tax rate look like? So, you know, so when I'm speaking or helping give advice to the various different casinos, that's first and foremost what I have to look at, the framework of the decision that has to be made. And then from there, let's take the vast majority of the scenarios, which is it's going to be sports betting. Maybe iGaming will happen in the future. And, you know, I'm going to assume that in my case, they're either one of the biggest in their state or a sizable operator, because that actually matters too. You know, are they, do they have the capital and the risk appetite for this, or won't they? But the first decision I think that has to be made is, now that you've been given this license, do you operate this yourself or do you sell this to another operator who will run this for you, right? And so a lot of decisions have to be made with if that's the right decision for you. It's easy to take the money, and in some states like Michigan, the money is sizable, that, you know, cannot be discounted. But what's important for casino managers and executives to understand is that the option of doing it yourself or selling it has near-term and long-term implications. So if you're going to go and sell it, you have to be, you have to understand that there will be someone in your house talking to your customers, acquiring them as their customers, and there's a long-term implication for that. And also, when you do launch iGaming and it does come, you know, are you selling the iGaming skin to them as well? Because that would be a very detrimental decision to make in the long term for the casino. And, you know, and in the near term, that player that may be a valuable player to you comes into the casino that you no longer own that relationship with, and can turn a bet away from somebody because they don't want to take the risk or for whatever reason. And that is a very risky thing to have happen to your property and your database, more importantly. And so if you can do it yourself and you can stomach it yourself, I do suggest that you try to take this on and do it yourselves at first. And then if you really feel like you can't, you can always then move to an access deal. But it's just really important because when iGaming does happen at some point in the future, you will need to have a sports book in order to effectively compete. It's very hard, as we've seen in New Jersey, for any sports book operator to compete without a casino and for the casino to effectively compete without a sports book. So it's not an easy decision, but one that you have to realize that to operate a sports book yourself, there are vendors out there that can help you through the process and do a lot of the heavy lifting and leave the marketing with yourselves or with someone else that you bring in. But it's not as daunting as a lot of people will initially say.
Key point there about the linkage between iGaming and sportsbooks, right? And so I think the point you were saying there is that, you know, they should go hand in hand. And I guess you're also alluding to the fact that you've seen deals where, you know, the iGaming is lumped into the sportsbook contract, but maybe that's not necessarily fully recognized by the casino what they're signing up for by actually giving both of those away. Is that what you're getting? I just wanted to make sure people caught on that bit of it.
And it's that, but if you're doing an access deal, for example, and you're like, okay, I'll take sportsbook for now and we'll negotiate casino for later, it does put you in a very vulnerable position, because if the casino doesn't give you the casino skin and you're just sitting there operating a sportsbook, that's very hard to compete when iGaming does eventually go. And so it's not worth as much in single position than together. And I forgot my train of thought, but and when it's almost like you're splitting two halves of a coin in a way. So if you're the casino, you're like, okay, I'm going to keep iGaming for myself and I'll sell off the sports betting, and then you don't have the sports book in your own offering to be able to offer your players, it's hard for you to compete. Like in the UK, for example, a company like 888 is a perfect example. They were very casino driven and they struggled for a long time because the churn of an iGaming player is so high that they were never able to garner that active customer base, where in sports betting, the player will, is all about best price. So they'll eventually churn, but they'll come back. So they're playing 4 or 5 different sports books. So it's a very different relationship.
And so, if we switch over to the capital side, and you're a casino looking at saying, okay, going this alone, what are you seeing on the capital side, and how does that translate back to a casino saying, should I do this? How could I do this given what you're seeing on capital?
So, and the tricky thing is what are the intangible benefits of doing this yourself? And how can I quantify that? And that is a really hard thing to do. So let's say you're doing your own sports book and there are people that would have never come to your casino, right? Who are now coming to your casino, younger men, wealthier, likes playing blackjack, maybe like playing some video poker. How do you, it's hard to quantify that right now. I don't think there's enough data out there to say, oh, if I do it myself, it's going to be an uplift of X per person. So, but it is something to take into account. But on the capital side, in terms of the investment to the casino, it will depend on how large your state is for mobile. For retail, it's not, it's your capital expenditures to take whatever sports bar you are or build something from scratch, how big you want to build it. You don't have to build something huge, especially to start out with. And then on the vendor side, everything, unlike land-based casino, which is very upfront CapEx driven, on the online side, everything is rev share built, right? So it's built off the bat. You can even work solely with affiliates if you want to on a rev share basis, and try to minimize the amount of upfront marketing that you have to spend. I don't encourage that, but you have a database. it's a casino database. We all have to be aware of how valuable that is to the sports book. There will be some conversion, but it's not the same player overall. So it is about developing a new relationship with a new customer base that will cost money. And but once that investment is completed, you will have to continue spending it, but you'll end up with a database of players that would never have come to your casino otherwise. But on the operation side, as I was saying, it's very revenue share driven. So it's more of a de-risked model. And all the risk is on the upfront advertising.
So I think one of the points you're making is that because there is an abundance of capital, a lot of these players are willing to lower the initial CapEx and share in the upside, right? That's certainly one of the prevalent models.
Yeah, it's just the way the industry has grown up as a rev share model. The only negative about the capital and the abundance of capital is the stupidity, right? The amount of money that's being given away by the larger operators to buy market share is obscene. And that is the only negative right now. And I don't know how long it will last. We definitely saw this in Europe with a few operators that did this, which is buying market share through overly generous promotions and continuous retention bonuses. And the question is, at what point does the player become educated enough to start venturing out to other operators who may have better prices and not just all about the free bonuses? Or do they ever do that? So, right now what we've seen in Michigan, which has been super successful, is over 50% bonusing back to the player, right? So, I don't know how sustainable that is. And it's a tough place to get your head around. It's like, okay, I'm going to give 50% of the money back to the player. And so it's a long game. That's all I can say.
Well, and those operators are able to justify that because they and their investors are assuming that there hopefully is this winner take all dynamic, right? That if I can lock in all this demand, all this sticky consumer traction, that network effect is going to make me a winner take all or a winner take most player, and therefore all of this will have been worth it, right?
Players are fickle, right? When the music stops, they're going to go elsewhere, right? We saw it with Bet and Win back in Europe. They were on every shirt, every soccer shirt. They were everywhere. And then one day they turned off the gas and they stopped marketing and they stopped giving all these bonuses to players. And the players didn't say, "Oh, I'm good here. I'm okay." They started bonus hunting around to different operators. So, that's why I question the longevity of the model, because the switching costs are so easy. So I think people will look for another way to retain the customers. I mean, the FanDuel and the PointsBet and the DraftKings product is amazing. They've done a great job. They started really well and they've continued to improve. So it's not like they're sitting back on their laurels, but it's just really hard when those bonuses are so generous to compete. iGaming is a totally different story, right? And that's why this whole thing becomes very complicated. The decision becomes complicated because in New Jersey, there's not a land-based casino that doesn't have less than 5% market share. And 5% market share of a $1.2 billion market is pretty good. So, it all depends on what the structure of the market looks like. Are you only allowed one license, one skin? Can you have two? So it's not easy.
Well, a couple of really good points in there, right? Where the sports betting model is more of, as we would put it, more of that linear model, right? You don't have that kind of two-sided network effect lock-in dynamic. Whereas iGaming is a very different story. These are, community-based games. I think Les and Nick were also talking about, free gaming as an onboarding mechanism into different kinds of, digital iGaming betting games, and how can that help, increase your conversion. So when you have two of these models, and I think that's your point, is that they should go hand in hand, and you don't necessarily have that winner take all, that platform, that stickiness on the sports betting that you might be able to have it on iGaming. And so when you bring both of these together, certainly that should be the base starting launch point, but then will the subsidies ultimately, the monetary subsidies, win out? How do you get that lock in? And it seems like that's still, an open question, right? Any other indicators you're seeing around that?
Yeah, so there are a couple of local land-based casinos that didn't play the bonus game, right? I mean, they gave bonuses, but they didn't go aggressive. And so I point to Parks, I point to Bet Rivers, I point to Elite on the mobile side, who sensible, right? Their percentage of promotions as a percentage of their gross gaming revenue was somewhere between 10 and 20. And they, in their local markets, did a very good job of defending their market share, especially net of the promotional spend. A very good job. So it does demonstrate that even with a casino model, so long as you put in the work, you can defend a decent market share. So
yeah, I think those are really good points. We talked a little bit about iGaming here. iGaming can include a lot of different things. Any areas within the iGaming sector that are particularly hot spots for you, or you're more bullish on looking into the future?
So I would say that the iGaming is very similar in terms of composition than the land-based. The one area I've always been super bullish on is the live dealer, which is a really entertaining experience where you're playing against a live dealer on your phone, right? And it's not cheap to the operator. The live dealer provider does charge quite the penny, but I do think that it has, it's an area that has done well, and especially in Europe, right? So it's interesting. So in Europe, operators had like one vendor that they worked with, like, here's my live dealer vendor. And then over time, as they saw the impact that it had on customer value lifetime, they started to add other. So it became like a more prominent part of their overall offering. So they had 4 or 5 different vendors offering the service. And it has become like 30-40% of a lot of their revenue. So I do think that that's a really, I'm really bullish on that. I think that virtual sports is another really interesting area, just as a differentiated product, right? So on demand, I mean, not a lot of people don't realize this, but when you go to the UK, which is probably the most mature market in iGaming and sports betting, there's 10,000 bookmakers on the high street. When you go into those bookmakers, 50% of the revenue is coming from a virtual horse racing. So it's, I do think that that's an interesting area that has appeal.
And you're not just talking about esports, you're talking about literally virtual sports, right?
Yeah. I'm talking about a virtual on-demand rendition of a horse race, a motor race, any sport really, but yeah.
Like virtual Madden, simulation Madden games that are now getting, ported into the betting landscape.
That's the next generation, a whole new world of virtual sport of an esport. Yeah. But, like states such as Nevada define these virtual sports as sporting events, I think. So you can put them in your sports book. So if there's a lull in interesting stuff going on in your sports book, you can play this and have your players wager on it. So integrating that kind of product, no, I don't think a lot of people have done.
And it's a good point on the regulation there. And you were also saying before, the kind of dollars that a lot of these tech companies are raising is just bonkers. and that there might not there isn't much correlation between business activity, promotional bonuses, and then also the regulatory environment. Are there certain states or regions that you see having a better model than others that would warrant greater investment than others?
I think New Jersey has really done a great job. I think a number of states have fed off of New Jersey and sort of perfected. New Jersey can be difficult, right, as a regulator, but they've done a great job regulating, right? I think having multiple skins, overall for the market, depending on how many casinos there are in a particular state, couldn't warrant one, a second skin. Having three, it's a lot, right? There's a lot of competition in New Jersey. Some of the things that I have in terms of the topics that I think it works better for the industry, not limiting the ability to wager in play or college on player props. I think the market should determine whether they want to use official league data or not. I don't think it should be legislated or regulated. It should be an operator decision. If the market is right, they should want to do it because there is benefit to having official data. I think that obviously the tax rate and the license fee goes without saying. But I think, they're like New Jersey's done a really good job. I think Colorado's done a great job regulating. It's interesting that, they have a 10% tax rate and then they allow you to deduct the federal excise tax and all promotions. So I'm not sure how great it is for the state. It's great because the operators can be a little bit more liberal there about bonusing and not have to think about it because the gaming tax effectively is not much, a little bit less. So they can do things with their players and communicating and take risks on bonuses that maybe in other states you might not be able to. And I think Michigan has done a good job as well. I'm trying to think of ones that, look, I think mobile is critical. States that have not, New York has done not a great job. Not only have they not allowed sports books in a location that's easily accessible, right? More players are going over to New Jersey to wager on New Jersey sports books than they are driving up to the Catskill Mountains to go wager only over the counter or through a kiosk, because you're not even allowed to do it on a device while on premise. So, and I don't understand their thinking as it pertains to whatever structure they've come up with for mobile with these two vendors, with two operators. I don't think that's going to be successful. I don't think monopolies are successful. So I'm a little worried about Florida, right? And whatever that was, I have no idea. So, and I think the lotteries to me are an interesting one. There isn't a lot of proof that they've done a great job with a monopoly situation, but they have a really good retail presence by use of lottery agents. So with that, I think they've done a good job, but not monopoly.
And it's a very good, detailed overview as you're looking at all the different states. When you zoom that out and you look at, what are the investors' calculus, if any, around where they think the states are going to, or how they see regulation playing out, because that's clearly such a huge determinant factor as to the growth ability of these different models across the country. Is there a common consensus that does make sense, or does the common consensus just not make sense as it relates to regulation?
Sometimes I have a tough time looking at the amount of money that's been being poured into the sports betting sector, like with this over the past, I'd say, year, right? Year and a half, with all of these SPACs, right? I'm not sure if there's a whole lot of thinking because some of these models are tough to get my head around. some of them from an investor standpoint. And I'm talking about the larger, SPAC money of people investing on, a European company raising a SPAC and unproven in the United States, but I'm going to raise $5 billion to be successful in the United States. When there's been a lot of European companies that haven't been successful, right? And have struggled despite the fact that they're superior operators back in Europe. So, I don't not, the investor sentiment for me is, I feel like it's a bit like 1999 all over again, a little bit, where it's just like, invest, let's get the money out, let's spend and, buy market share, buy companies. It's so hard to do business nowadays because you don't know if your supplier is going to end up being acquired, right? So, it's very hard to be like, I'm going to go with this sports betting provider or this platform technology provider. They could end up as your competitor very easily. So it's hard to get, it's hard to make decisions.
Yeah, I would absolutely share in the sentiment that just overall, when I look at the broader tech valuations going into end of last year, we saw absolutely inflation in later stage tech company valuations across the board, really being attributed to a lot of kind of like growth stage kind of PE investors going down into late stage VC. For the first half of this year, we've seen it actually now you have late stage VCs going into the early stage VC territory. So now you're seeing early stage VC valuations also increasing in the earlier part of the market. So, it just seems to your point about where the current state of the regulation is on a state by state basis. There are some pretty critical assumptions these investors are making. One around, pretty widespread regulatory leeway for these companies to continue to expand across the country, A, and then B, the presence of some kind of winner-take-all dynamic on the iGaming side. Those two things seem like pretty big open-ended questions, given the amount of money going in. That said, there's a lot of money going into all these companies, which then, just makes everyone seem, I guess, to normalize it and make it seem okay. But very much so agree with you. So you get the last word, Melissa. Any last thoughts or comments here?
Well, no, I just wanted to actually follow up on what you were just saying about the investor and the assumptions that are being made. You've got 4 states that really matter: Texas, New York, Florida, and California, right? Texas is gone for the next 3 years, right? We've seen that come and go. New York and Florida are pushing this model that is very unique, for lack of a better word, and very unclear if who's going to be able to participate in that, right? Very limited participation, right? And to me, though in California, we'll eventually get there, but right now they're pushing retail, which is not that very interesting. Wager on all the time on event-driven service. So you realize the importance that iGaming has in this ecosystem, and especially for the viability of these companies, and then that leads back to the investors. So to me, making sure that the movement of iGaming continues or moves a little bit faster is what's critical here for the investor, for the survivability of these companies, for everything.
Great. Well, also a well-named company, Melissa Blau, Director of iGaming Capital. Thank you so much for joining us today. It was really a pleasure to have you with us.
Thank you so much.